Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is January 2nd, 2024. Happy New Year to everyone. We have a shortened week due to the holiday on Monday, but we have some important data to go through this week. We get the Fed minutes for the December meeting, and then we also get a lot of jobs data for the December period. And also earnings start this week, and so we'll get to see if all the earnings are actually meeting the expectations that these stocks have put into their prices. So let's find out and jump on in.
Okay, let's go over last week's market recap for January 2nd, 2024. It was a quiet, low-volume week due to the Christmas holiday, but the World Equity Index was a leader, up 1%, while everything else was barely above the baseline. All right. Market headline number one from last week, the S&P 500 just closed the year with its ninth consecutive up week, marking the longest weekly win streak since 1985 when it had 12. You have to go back all the way to the 50s, 60s before that happened prior to 1985. So we'll see the first week of the new year if we can hit 10. All right, market headline number two is the rebound for the year. If you remember back to the dismal 2022 period, most everything was down except cash and commodities. Well, it was a rebound for pretty much all of the major asset classes except commodities, and with Bitcoin being the leader up 155%. And so this is the fourth positive year out of the past six, but we did have 2 years that were pretty significantly down. All right, let's take a look at the, let's zoom out and take a look at the 2-year chart of the S&P 500. And bottom line is that we were at almost 4,800 at the start of 2022, and we finished the end of 2023 at about 4,800. So really the market has gone nowhere over the last 2 years. And I'm going to show you a new chart that actually looks at the last 2 years and shows you that the S&P 500 over the last 2 years has really only been up 3%, and most of that coming in the form of dividends. And if you look, cash actually even did better, gold did better, and commodities, even though it was the worst performing asset class this year, it was up significantly in 2022. So over a 2 year, it's actually double digits in the place that to be if you're a buy and holder. But if you look down here, a lot of things, including a lot of the bonds, are still over the last 2 years negative, including the long treasury bond, which is still down 30%. Small caps are down 7%. So we shall see what 2024 brings. And so when we look down at the headline number 3 and dive down into the sectors, you can see that it was a tale of two cities. You've got the big winners, technology, communication services, up over 50%. And then you had the losers, energy, consumer staples, and the utilities, which usually is the more conservative safety type of equities. They were actually negative for the year. And if you look back just 1 year, they were the big winners of 2022 while everything else was negative. So we shall see what 2024 brings. And here is a chart of the 2024 predictions from Wall Street. And this is very interesting because this is the first time in a very long time that they are actually predicting a negative return for the S&P 500. As you can see, over 24 years, this hasn't happened. So bottom line is active management will be key heading into 2024. We are anticipating with the election, with a possible war, with all the chaos, it's going to be an exciting year. You're going to want to have that active management inside your portfolio. All right, let's take a look at the short-term chart of the equity market. This is the S&P 500. We started adding back the second week in November, and it has gone off to the races. A lot of that had to do with the Fed basically pivoting and saying that they're done raising interest rates and they'll be looking to lower or cut interest rates as soon as they possibly can. Well, the market anticipated that we're going to get a bunch of rate cuts, and the market shot off. Well, now they're starting to reevaluate and go, is that really what's going to happen? So in the back of the 48 level, so we'll probably see the market kind of sell off a little bit here, and then we'll kind of reevaluate where we're headed. All right. On the bond side, let's take a look at that. Again, also started adding on November 7th, and a nice 6% move over almost 6 weeks. That's almost 1% a week. And again, a lot of that had to do with the possibility that they're going to start cutting interest rates in 2024. Again, to be determined, but that's what the markets anticipated, and that's why the Santa Claus rally was basically everything, equity and bonds went up. All right, let's go over the top 3 market movers for this week, the shortened week here. Wednesday, we get the Fed minutes from their December meeting, and so they'll be parsing through that to find out if there's any indication of what the Fed is actually going to do heading into 2024. Thursday, we get the ADP employment reports. Friday, we get ISM services and the non-farm payroll to see where the jobs numbers are, see if this is that lagging indicator that we're waiting for or not. Here is, as I said earlier, we are starting earnings, and really we just start here on Wednesday, and probably the biggest one of the week is going to be Constellation Brands. That's the marketer and distributor of beer and wine and spirits, so we'll get to see kind of an early indication of how many people were drinking their sorrows or having a good time over the holidays. All right, that's it for this week. Thank you for joining us. Our next update is Monday, January 9th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.